Now, Southeast Asian property tech firm PropertyGuru narrowed its net loss in the first quarter. Total revenue rose 12% on the back of a strong growth in its Singapore marketplace segment. Marketplace's revenue increased 13% as Singapore offset a slower recovery in Vietnam as well as Malaysia. Let's bring in the company's CFO, Dische. Joe, good to have you with us. Not a great set of numbers. I qualify that because we saw a drop in the stock price. I mean, can we expect better numbers ahead, better quarters ahead?
First of all, thank you very much for having me on. It's great to be here. Look, we're really pleased with our results. For us, double-digit revenue growth. We saw flat costs. We also, therefore, saw a double-digit EBITDA margin. We're seeing really good performance from our Singapore business. We're seeing some recovery in Vietnam and in Malaysia, where we have had some challenges. Good product adoption, so we're actually really pleased with this set of results.
But it is about profitability in the end. What will you be doing to improve profitability? How will you manage your costs to ensure profit goes up?
Sure. Yeah, look, it depends which metric you pick. Internally, we tend to use adjusted EBITDA as our metric. It's what most of our peers use. And for that, we've seen consistently great increases in operating leverage and our capacity to raise profitability by that metric. I think our corporate costs are decreasing as a percentage of our revenue. Our revenues are rising. We're managing costs really well. So I think we'll see adjusted EBITDA continue to rise and show good leverage and reach some of the high marks of some of our global peers.
In terms of markets, Singapore was an outperformer. Thank goodness for that, because it did manage to counter the slowdown in other markets. Can that be sustained? I mean, given all the additional taxes that Singapore government is imposing on, property purchases?
Absolutely, yeah. I think
and given the high rate environment.
Yeah, absolutely. And I think for us, Singapore is definitely coming off a high. It's seen a huge increase in the number of transactions and a huge increase in price over time, and that's not something that can be sustained in the long term. So at the moment, we're in an environment where the number of leads out there is a bit lower. That's actually a sweet spot for us. It's quite hard to convince agents to spend sort of more money on our site and deliver more leads when the properties are effectively selling themselves. So right now, where there's a fewer leads in market, the agents are investing in our site and the one that delivers all their leads. So we're seeing our revenues doing very well. In terms of longer term outlook, I think Singapore is a very attractive place for people to live and work. It's an island, and sort of property in itself is in short supply. So demand will always be in excess of supply. And we think that the market will stabilize now, increase, and we'll just keep adding lots more value.
Right.
And hopefully be rewarded for that.
But what's driving demand? Which pocket is it? Is it the Lux segment that is driving demand in Singapore?
Yeah, I think that the Lux sector is probably a little more depressed. Obviously, some of the stamp duty changes doesn't encourage overseas buyers or certain overseas buyers to come in. I think what we find is that most demand is really domestic. It's not really international people who are coming in to buy. It's domestic, and I think your average Singaporean, feels relatively good at the moment. Prosperity is quite strong. Singaporeans, in my experience, are, I wouldn't say obsessed, but they're super focused on property ownership as part of their sort of life journey. So I think they'll continue to buy property and invest for them and their children.
But increasingly, Singaporeans are feeling squeezed because costs are high. The same situation in Malaysia, where there is a property overhang.
Yeah.
What do you see that play? How do you see that playing out for the rest of 2024?
Yeah, sure. I think Malaysia has its own interesting set of problems. Obviously, there's been a bit of instability from a government and a government policy point of view. There is that oversupply. There was probably too much building at the higher end and not at the middle and sort of lower end of prices. But the oversupply is edging down now, which is really encouraging for us. And I think we do see some positives. There's a lot of investment in infrastructure, particularly the links between Johor and Singapore. So that's really encouraging as well. We're seeing interest rates drop. We did a recent customer sentiment survey. I think 1 in 3 Malaysians are expecting to buy a property or move property in the next 2 years, despite sort of changes in price. So I think we see a much more positive outlook for the Malaysian economy and the property industry going forward.
It doesn't change the picture that most people think that property in Malaysia is unaffordable. Are you seeing more people renting versus buying property?
Yeah, sure. I think that's been a trend actually we've noticed across many of our markets. So in Singapore as well, we've certainly noticed many more rental listings going up over time. And I think, for some people who are unsure about the state of the property market, and for people who are sort of sitting on the fence at the moment, I think it's quite a good option for them to rent, to see how prices are moving, and when interest rates drop, they can jump in and be more aggressive on that side. So we're definitely seeing more interest in renting generally.
And of course, you're a regional player that includes the likes of Thailand, Vietnam. How are these markets doing in comparison?
Yeah, look, Vietnam, I always say Vietnam is our most exciting market, and I hope as it recovers from some challenges, it's going to really sort of prove that. So we had a lot of government intervention, which was definitely a headwind for us. So they pushed interest rates up, made it really hard for people to actually gain a loan, and there was a lot of issues around developers and them being able to take bonds, etc. Since then, that government policy is totally reversed. The developers are doing better. Interest rates are at sort of the lows not seen for a long time. So we're starting to see a lot more consumer interest, and our customers, the agents, are definitely getting more active. So, we are forecasting a recovery. I don't have a crystal ball as quite how quickly that's going to happen, but we're really positive for the rest of this year. And then in the longer term, Vietnam really benefiting from the sort of the decoupling between China and the US. And it's a strong economy, really digital, very young. So we're excited about that.
So overall positive for 2024. Dische, CFO of PropertyGuru Group there. Thank you so much for your time today.